Now, the December consumer price inflation has softened and it softens to a 4-month low as food prices come down. Now, Pallavi is here with the takeaways. Pallavi, over to you.
Right, like you've mentioned, inflation has actually come in at a 4-month low of 5.22%, and this is not entirely unexpected. It's broadly in line with expectations as well. Now, let's have a quick look at some of the key internals. The de-acceleration that we have seen in inflation is led by food prices. Food and beverage inflation has come in at 7.69%. Vegetable inflation, which has been running high the last few months, has softened a tad bit. It's currently at 26.6%, which means while it's still elevated, it has softened from the print we had seen the previous month. Cereal inflation has come in at about 6.5%. Inflation in meat is at about 5.3%, and in milk it's at about 2.8%. Let's also have a quick look at some of the other internals. Clothing and footwear inflation is at 2.7%, while housing inflation is also at about 2.7%, so not too different from the figures we had seen a month ago in November. Fuel and light continues to remain in de-acceleration, coming in at minus 1.4%.
Right, Pallavi. Thanks for taking us through those numbers. Now, viewers, rupee falls to new lows again at 86.40 rupees against the US dollar. Now, what is leading to this? Vishwanath joins in with factors leading to this fall. Vishwanath, over to you.
So what is happening with the rupee? Essentially, there's been a sharp drop during the day today, of course, and of course over the last few weeks, where we have seen now the rupee hit about 86.50 against the dollar. This morning it hit about 86.40, come down further. What we also need to understand is the cumulative fall during this financial year, that is since April 1st, it's down about 3.5–4%. So that is another important thing to notice, that there has been a sharp drop, rupee being one of the worst performing Asian currencies currently against the dollar. What has happened with the rupee? Well, there are a few factors that are actually leading to the rupee fall. First and foremost is the macroeconomic data that is coming out of the United States, where employment data is coming in stronger than expected. Unemployment levels have dropped in the US. The chances of a Fed rate cut, therefore, have come down. Most expectations are that in 2025, there'll at best be 1 or maybe 2 rate cuts at best. In fact, people are penciling in maybe a chance of a rate hike, considering that macroeconomic data is coming in strong. This has led, of course, the dollar and the US bond yields to rise sharply in the US, which is having an impact across countries. Most Asian currencies are dropping against the dollar, but as I said, rupee is one of the worst performing Asian currencies currently. This weakness is likely to continue till at least the 20th of January, when Donald Trump takes charge as the president of the United States of America and a new government comes in. What is the RBI doing in the interim? Now, we need to, of course, focus on the rupee and where we are currently. RBI is staying away from excessive intervention. It seems that is what the new foreign exchange policy is at the RBI. We are also seeing some amount of this currency pressure is not so transitory, that this is happening in a slightly more permanent fashion. Reserves have dropped about $12 billion this financial year to about $635 billion. And that's a main reason why further intervention might be stopped, because excessive intervention might open the rupee up for towards speculative attacks. What is also important to realize is that there are a few measures. If the RBI is not actually intervening, what can be done to protect the rupee or support the rupee? Well, the government could look at reducing gold imports. You could also repatriate some of the capital that is existing in state-owned companies. You could also bring in certain other measures, such as boosting capital inflows into the country, and also mandate exporters to maybe sell their forex proceeds. These are all measures that could help the rupee. The analysts at Nomura are pointing out that this might be the second line of defense. The first line of defense, of course, is the intervention, which currently seems to be at a pause. The second line of defense seems to be applicable in countries like China. So maybe India could look at those measures. But as things stand, rupee is looking like it's going to be under pressure for some time.